joining us, Mr. Bhavik Mehta, Centric Financial Head of Research. Thank you, Mr. Bhavik, and thank you for joining us. At the outset, how do you read the positive performance of the Dubai market or for the UAE markets since the beginning of 2026? We were missing, of course, the momentum since the end of last year, but apparently the market is regaining earnings. So what's your reading?
Well, to start with, we have entered 2026 with a lot of bullish and positive momentum. The last 5-year performance of DFM and ADX index has basically outgained. It has outperformed all the major Gulf indices, including Tadawul, Oman, and the Qatari index. A lot of bullishness is there. We've all seen how the non-oil trade activity, the service sector is picking up in UAE. And this is the business model, the economic model, which is basically being followed by other nations as well. So Saudi diversifying its economy, Qatar expanding its non-oil economy. All of this has been taken with a view that UAE has been performing well. The momentum is there. Now all eyes will be on the upcoming earnings season that will be starting towards the end of this month.
What are we to expect from the quarterly earnings, especially if we're talking about the real estate companies or the banking sector in both markets?
The real estate and banking again is accounting for nearly 50% of the total index weight across the DFM and the ADX index. The most surprising thing about last year's rally was, nearly 40 to 50% rally across all the UAE banking names. So Emirates, NBD, Mashreq, FAB, we saw rallies in the range of 35 to 45%. That was something that propelled the entire local market sentiment higher. Now, what we are basically looking at is the amount of incremental growth that we are going to see in the non-funded income part of these banks. So last year, the biggest driving growth story for the UAE banking sector was rise in the fee and commission income, which nearly accounted for 40 to 45% of the total revenues of these banks. So that is one big thing that we are looking at as to what is going to be the direction on that particular thing. US interest rate cuts are going to be negative for some banks, positive for some banks. As far as the real estate sector is concerned, we ended the Q4 on, I would say, a bit of a moderate tone. There was not very big bullish triggers as far as the real estate sector stocks rally has been concerned. So all eyes will be on how the management, the real estate guys, they announce any major new project launches, the kind of operating margin and the guidance flow for the rest of the year.
To what extent do you believe that the UAE markets, when it comes to equities, are attracting foreign investors during this period of time, amidst, of course, the absence of any vision in several markets around the world, and amidst, of course, the fears of technology bubbles? To what extent do you believe that those markets are safe markets that will attract foreign investments?
UAE markets so far have been perceived relatively safe and insulated to major ongoing events that are happening across the globe. So let's talk about the oil price decline that happened last year. Because of the stable peg of UAE, along with the other Gulf peers, as well as the relative insulation to the oil prices, the number one factor that plays into the foreign investors' mind is whether the oil price decline will actually affect the local prices. It is not so far. The foreign investor, when he is investing in a country like UAE, he is primarily betting on the consumption theme, the rise in the population theme. So one of the reasons that you've seen rise across major stocks like Deva, Salik, Parkhead is this rise in the overall consumption population. So the overall foreign percentage, the participation of the foreign investors continues to remain high, especially in index like DFM. And it would be worthwhile to see as to what exactly the investors are actually going to bet on in the coming months.
We are talking about, of course, some cash dividends for the companies, especially for the major companies. Do you believe that these dividends will be actually sent again to the market after this distribution? And to what extent do you believe that those dividends will be rewarding for the shareholders?
If you talk about UAE stocks, the dividend investment yield has been one of the major driving factors. So company like Salik, Parkin, and even something like ADNOC Gas has given something in the range of 4 to 5% and above. That has been the number one driving force for a retail investor to participate in the stock rally. Now, what has happened is, because we want to start with the Q4 earnings, the overall announcement on whether you talk about dividends or buybacks, they're going to be a little bit conservative. But as the year progresses, we could probably see more dividend hikes and major cash dividend distribution payouts by major names, including MR.
Last question related to the real estate sector. The idea of reducing the interest rates, the expected rate cuts. To what extent do you believe that this will actually have the mortgages become more appealing, or the indebtedness in the real estate? Do you believe that the real estate mortgages will increase in the UAE, especially that this is not a sustainable pattern for the real estate investors?
Typically, if you look at the overall real estate buying that has happened in UAE, Dubai specifically, we have seen a lot of properties that have been bought on cash. The amount of mortgage or the loans that the consumer take, that has reduced over the last 2 years. So as such, we don't see any major positive flow through from reduction in low interest rates to the actual mortgages, because we are seeing more of cash-based transactions. And typically what happens is, even if the interest rate comes down, the actual pass-through from the main interest rate cut to the mortgage rate has a delay of nearly 6 to 9 month cycle. So the immediate impact is definitely not going to be seen in the real estate buying as such.
Thank you very much, Mr. Bhavik Mehta, for joining us. It was a pleasure having you. Shukran lakum.
Thank you.